Alright guys, welcome back to another video here. Today we'll be looking at doing a video of trend line trading strategies. So today's gonna be like a quick video just to show you how, because in trading there's different trading strategies. We have indicating strategies, we have support and resistance, or in other words, supply and demand. We have institutional, there's different kind of trading strategies that are used by many traders. But the most common ones are, I think, trend line trading. So I'm gonna show you a quick example of what I mean trend lines. So trend lines are normally lines that go in diagonal. So obviously it can start from here. For example, the line can start from here and it'll go all the way to down here. Or it will start here and go all the way down here. So this is what we mean by trend line. So it can either go downwards or you can go upwards and obviously upwards is what we call so the bullish run. So this is a bullish trend line and a bearish trend line. So there's two different kinds of trend lines that you need to understand. So first of all, it's all about understanding what how is the market moving. So in terms of what's the market structure we're seeing here. So by default, we can already tell that the market is downwards. So as we can see, we have a downwards pressure, meaning the market is on the down, so bearish structure. So since the market is in a bearish structure, we should only be looking to place a trend line that is on the downside. So we start from the top where we have the first touch here. So by default, we can see that the market has been reacting to this trend line here. Now there's different ways to draw trend lines. And bear that in mind. There's different ways to draw a trend line. A lot of traders do go on the line graph and draw the trend line. This is because this shows you exactly where the market does react in terms of um price close and price open, for obviously for the bullish and the bearish. So this is how a lot of traders draw the trend line. So for example, so you can see there's a we have this touch and that touch here. So there's different ways to draw your trend line. But I'm gonna start off with the basics in terms of you know. So from here we can see, and obviously normally once it goes above 1, 2, 3, 4, it becomes a trend line because it's above three or 2 or 3 or more touches. We consider at a trend line as traders. So that is how you can tell if you're on a trend line. We have a trend that, I'm saying, when we have more than 2 or 3 touches, because this is a trend, as we can see here, a trend to the downside, a trend to the downside, as market is showing. So therefore, for traders that use this strategy, they will be looking to enter in the market when price has what we call, you know, price has what we call, you know, go and touch the trend line, to confirm maybe their possible entry to the downside. That's how a lot of traders do. So make sure that they'll place what we call a alert around this price area, so that when market comes and tests this price level here, they will look for entries or look for patterns that suggest or that implies that the market will be seeing a continuation to the downside, to at least test the lows of this structure that we see here. So this is on their monthly and on a weekly time frame. So let's go on a smaller time frame, and we were able to show you more how these things do work. So for example, let me see. So on the 4 hour, let's say we using the 4 hour for entry rise. So a lot of traders, as I said, you start from the top here, and as you can see, so this is a beautiful nice trend line to the downside, as you can see here. Price started touched here. We had a one touch. Price going down, going down, going down, all the way down. Second touch, as we can see here. So our third touch right here, fourth touch right here. Now, many people might think this is a change or our trend is broken, so therefore they'll look for buying opportunities. However, this is what we call a what we call. Let me point that out there. So this right here is what we call a fake breakout. A lot of traders who are new to the market doesn't understand that things like fake breakout is how the big people in terms of the money makers use to as form of liquidity to grab liquidity to obviously to push away all the stop losses, because a lot of traders would not anticipate that price will break this trend line, because obviously it has touched the first time, second time, third time. It's already seen that there's a strong level of resistance here. However, the market participants or the big traders, they know this. Because they know this, they therefore go and hunt all the stop losses above this level that we have here, and then strongly pushes the price down, come and test the trend line and pushes downwards. So that's how the market and the big institutions and the players of the market, this is how they normally hunt out stop loss. So that's what we call liquidity grabs for these institutional traders. That's how they hunt stop loss. So normally they call these things what we call so they call it, let me just point that out there for you. So this is a sell, so sellers liquidity zone. So I'm pretty sure, yeah. So obviously, yeah. So as you can see here, because this is where a lot of institutional traders will have, they're selling trades entered, because obviously they know a lot of traders will be targeting to put their stop losses right here and above here, so that they wouldn't call out if they place a sell limit around here. However, because institutions know that there's still liquidity to touch at least to this resistance before a push downwards, they would obviously push price in terms of a fake breakout, take out all the stop losses, stop hunts here, and then change straight direction to below the trend line, come and test this trend line, confirming that the sales are still valid, and push price downwards. That's how the market, and obviously the market participants, this is how they normally trade, and obviously they hunt out all these stop losses that you know retail traders normally doesn't understand these dynamics of the market. So yeah, this is how traders normally institutional traders normally enter and obviously trade in the market. So yeah, so let's say we have a retest, price. So already we can tell this is a POI, so point of interest for traders. So therefore, a lot of traders will be looking to, I will call it, looking for price to reject this level and to test the downside. So obviously, as I said, this is a point where a lot of traders will put their sell limits right around this range, as they believe the trend line um, is strong enough that price will touch it, create obviously weak bullish candles, suggesting that there's a sellers that take control, push price downwards, and then you can see sellers taking control again, following the trend line strategy that we can see here. So this is how many trend line traders, I'm saying like use the market on their advantage to enter trades that would show a high probability of price, going in their favor. So yeah, so that is my video on using trendline as a strategy to enter your trades as market. So starting off the top here, we can see that by using this, by following this trend line, a lot of traders will have their stale limits and stale stops right here to catch you know, the wicks to the bottom and grab some profits, you know. So always make sure and wait for confirmation before you enter, especially these trend lines can, you know, there can be a what we call a freight breakout, price come down, retests the trend line to the lows, and then price push downwards. So there is a understanding that needs to be set before um setting your stop losses and on like all of that stuff. So yeah, that is the video for today, guys. Let me know what you think in the comments. Like, comment, share, subscribe, do all that nice stuff. It's been your boy FMA, and